Welcome back to your Fincast. It's President's Day weekend, and I was thinking about this.
Okay.
It's funny how almost every U.S. dollar bill has a president on it,
Right.
except one.
Oh, is it Lincoln, but he's on the penny?
Yeah, it's a good guess, but not quite a dollar, right? It's not a president at all.
Oh, really?
It's Alexander Hamilton
Oh, wow.
on the $10 bill.
Huh.
First Treasury Secretary.
That's pretty fitting.
Yeah, pretty fitting when you think about it, since we're diving into the U.S. dollar today.
It is, yeah. It's a really, it's a timely topic, too. The U.S. dollar is surging.
Yeah, it really is.
So we'll unpack what that means for you as an investor.
Okay, so we've got analyst reports, we've got market data, we've even got earnings call transcripts.
Right.
And one thing is clear, the dollar is strong.
Yeah.
But is that a good thing? Or is it a bad thing?
That is the question.
It's like there are two sides to this coin.
Absolutely, yeah. You often hear about this, this inverse relationship between the dollar and gold. Usually when the dollar strengthens, gold prices weaken and vice versa.
Right, but one of our sources, a CNBC analyst, was pointing out that this isn't always the case.
Yeah.
Like during 2008, the financial crisis or the COVID pandemic.
Yeah.
Both gold and the dollar went up at the same time.
Exactly. And they called out a bad sign, actually.
Interesting.
Yeah, and what I think is so fascinating about that is that it shows you what's going on with investor psychology.
Okay.
During times of uncertainty and fear, people want what they think is safe.
Yeah.
They don't care about the normal market correlations, really.
Right.
So they'll pile into both gold and the dollar,
Got it.
seeking stability above all else.
Okay, so is that what's happening now? Should we be worried? Because HSBC, another analyst we were looking at, predicts that this inverse relationship will come back.
Right. That is the big question.
Yeah.
If the dollar weakens, like a lot of analysts are predicting, and that historical pattern comes back, then yeah, we could see gold prices really take off.
So, okay, beyond gold, how does a strong dollar actually impact companies? Because we see all these examples of businesses taking a hit.
Yeah, it can really create some headwinds for companies, especially the ones that do a lot of business overseas.
Yeah, right.
When our dollar's strong, it makes our stuff more expensive in other countries,
Right.
which could hurt exports.
Makes sense.
And then also, any money a company makes in, euros or yen or whatever,
Yes.
it's worth less when they change it back into dollars.
It's not just a minor inconvenience either.
No, not at all.
Netflix, for example, said they lost $1 billion in sales because of the strong dollar.
Wow.
Billion with a B.
That's a lot of money.
And it's not just the big tech companies either.
Right.
Like even McDonald's and Coca-Cola were talking about the dollar in their earnings calls.
Yeah, they were.
I think McDonald's even said that they expect the strong dollar to to hurt their earnings per share for the whole year.
Yeah, it's going to have a real impact.
Yep.
And, Coca-Cola, they're saying it could be like a 6 to 7% hit to their earnings growth just because of exchange rates.
Wow. So what are companies doing to protect themselves from this, currency risk?
A lot of them are using what they call hedging strategies.
Okay.
So they're using these financial tools. Like, it's almost like insurance against, the dollar moving around too much.
So they're trying to minimize the uncertainty.
Exactly.
But, what does this all mean for us, the everyday investors?
Right.
Morgan Stanley is warning that a strong dollar is going to make stock performance, more unpredictable.
Yeah, that's because a strong dollar creates winners and losers.
Okay.
Like, if you think about it,
Yeah.
some sectors are going to benefit from it while others are going to have a harder time, right?
Yeah.
So if you're trying to pick individual stocks, it just gets even trickier.
Got it.
You need to really understand which companies are vulnerable to these currency swings and which ones might actually do better because of it.
So is it better to stick with the broad market ETFs then? Like just ride the overall market and hope for the best?
That's definitely one approach, especially if you just want, general exposure.
Yeah.
But even within those broad market ETFs, like, the SPY, which tracks the S&P 500, you'll see different performance across different sectors,
Right.
Some of those sectors might be hit harder by the dollar than others.
So which industries are most likely to, to really feel the pain from this strong dollar?
Generally, it's the industries with a lot of international exposure.
Okay.
So think technology, consumer goods, even financials.
Got it.
Like the XLF, which tracks financial companies.
Yeah.
That could be more volatile because a lot of those financial companies, they operate globally.
Right.
And their performance is tied to how well those companies are doing, all over the world.
And on the other side, are there industries that might see a positive impact?
Yeah, for sure.
Okay.
Companies that are mostly focused on the U.S. market, they might be in a better position.
Okay.
Think about retailers, for example.
Okay.
Like there's the XRT, which tracks the retail sector. If people are benefiting from a strong dollar, they might spend more at those retailers.
Okay, so the picture's getting clearer.
Yeah.
We see how it affects specific companies, even entire sectors.
Right.
But before we move on to, what we can do as investors.
Yeah.
I have a bigger question.
Okay.
Is a strong dollar ultimately good or bad for the U.S. economy as a whole?
That's a tough one.
Yeah.
A strong dollar, it can attract foreign investment, which is good for growth,
Okay.
but it can also make our exports less competitive,
Right.
potentially leading to trade wars and tariffs and stuff.
It's almost like a double-edged sword.
It is, yeah.
Strength in one area might create weakness in another.
Exactly. It's a real balancing act.
Yeah.
And the long-term impact is really hard to predict.
Yeah, it really is.
It's not always clear-cut.
But we've been kind of unpacking this whole strong U.S. dollar thing.
Yeah.
Looking at gold and corporate earnings and even like different parts of the stock market.
Yeah, and as we've seen, it's like this really complicated web of stuff,
Right.
Some industries win, some lose. It's all part of this global economic dance.
I want to go back to something you mentioned earlier
Okay.
about the dollar and the overall U.S. economy.
Right, because, on the surface,
Yeah,
a strong dollar seems like a good thing, right?
Yeah.
But it's not always that simple.
It's like if the U.S. economy is the cool kid in school, right?
Okay.
Everyone wants to hang out with the dollar.
Right.
But what happens when that popularity fades?
Right.
What if the U.S. economy starts to, lose its shine?
That's the key question.
Yeah.
If the U.S. economy weakens, the dollar could become less attractive.
Okay.
And we could see things reverse.
So that strong dollar that we're seeing now
Yeah.
could start to weaken.
Potentially, yeah.
So what would that mean for investors who are, maybe doing well right now because of the strong dollar?
It could mean that the dollar loses value,
Okay.
which could actually be good for companies that have a lot of foreign earnings.
Okay.
But it might hurt the companies that are more focused on the U.S. market.
It's like a seesaw, right?
Yeah, exactly.
One side goes up, the other has to go down.
Exactly. And currencies, they move around a lot.
Right.
It's a constant ebb and flow.
So how can investors kind of prepare for these, potential shifts?
Right.
It sounds like we're trying to predict the future.
It's about staying informed
Okay.
and being adaptable.
Right.
Keep an eye on economic indicator and be ready to change your portfolio if you need to.
Are there any specific indicators that we should be, really paying attention to?
Yeah, things like inflation, interest rates, GDP growth.
Okay.
These are all things that drive currency values.
Okay.
They can give you a glimpse into the health of the U.S. economy
Uh-huh.
and where the dollar might be headed.
So it's about keeping our finger on the pulse, right?
Yeah.
Noticing any signs of weakness or change.
Exactly. Being proactive is key.
That sounds like a lot to keep track of.
It can be.
Yeah, for someone who's not an economist, it can feel a little overwhelming.
It can be, but there are resources out there.
Okay.
Financial news websites, economic research reports.
Yeah.
You can even talk to a financial advisor.
Right.
Those can all be helpful.
Right. And of course, we're here to help too.
Absolutely.
We'll keep breaking down these developments here on your Fincast.
We'll keep you updated.
Yeah, our goal is to give you the knowledge and tools you need
Right.
to make informed investment decisions, no matter what the dollar is doing.
Exactly.
Okay, so let's shift gears a bit
Okay.
and talk about specific investment strategies.
Right.
Given this strong dollar environment,
Yeah.
you mentioned diversification earlier.
Right.
Can you expand on that a bit? What does that actually look like?
Diversification is always important,
Yeah.
It's a fundamental principle of investing.
Right.
But it becomes even more important when currencies are fluctuating.
Okay.
You want to have your investments spread across different types of assets,
Right.
different sectors, and even different geographic regions.
So don't put all your eggs in one basket.
Exactly.
Especially if that basket is, really tied to the U.S. dollar.
Right. For example,
Yeah.
you might want to think about increasing your exposure to international stocks
Okay.
or emerging markets.
Got it.
Those could do well if the dollar weakens.
That makes sense.
Yeah.
What about bonds?
Okay.
Where do they fit in?
Bonds can be really good for protecting against stock market volatility,
Okay.
but you need to watch out for interest rate risk.
Because if interest rates go up,
Yeah,
bond prices go down.
that's right. So
Okay.
you might want to look at shorter term bonds
Okay.
or bond funds that aren't as affected by those interest rate changes.
Okay, so we've got stocks, bonds, international diversification.
Yeah.
What about, alternative investments? Are those worth considering?
Alternatives like real estate or commodities,
Yeah.
they can offer diversification benefits
Okay.
and they might protect you against inflation.
But they can also be more complicated, right?
Yeah, can be, yeah.
And less liquid.
That's true.
Yeah.
It's important to really do your research
Yeah.
and understand the risks before you jump into those.
Okay, so there's a lot to think about.
There is.
But I think the key takeaway here is that there are ways to, to position your portfolio
Yeah.
for this strong dollar
Uh-huh.
and for a potential shift in the other direction.
Right. Be prepared for different scenarios.
Yeah, it's all about being prepared.
Exactly.
Speaking of prepared, we've covered a lot in this deep dive.
I have.
And I think it's time for us to take a quick break.
Okay.
We'll be back in a few minutes to wrap up with some final thoughts.
Right.
And some advice for our investors.
Sounds good.
So stick with us. Welcome back to your Fincast.
We're wrapping up our dive into the strong U.S. dollar.
And it's been quite a journey.
It has.
Exploring all the ins and outs of currency markets.
Right.
And how they impact our investments.
Yeah, we've talked about a lot.
We have.
From, the dollar and gold to earnings, specific sectors.
Right. We even dug into some strategies.
We did.
For, navigating all of this.
Absolutely.
And I want to leave our listeners with some key takeaways.
Okay.
And some actionable advice.
Yeah, sounds good.
What can they actually do?
The first thing is don't panic.
Right.
A strong dollar isn't always a bad thing.
Yeah, it can be a sign of a strong U.S. economy.
It can.
Attracting investment and driving growth.
Right. But it also, presents challenges and opportunities for investors.
So what can investors do to position themselves?
Well, like we've been saying, diversification is really important.
Yeah.
You want to spread your investments around.
Right. Different asset classes, different sectors.
Exactly.
Different regions even.
And like we said, don't put all your eggs in one basket.
Right.
Especially if that basket is, super tied to the U.S. dollar.
We talked about looking at companies with limited foreign exposure.
Yeah.
Or companies that might even benefit from a strong dollar.
Right. And maybe even exploring international stocks or emerging markets. Those areas could benefit if the dollar weakens later on.
We also talked about bonds.
Right. As a way to protect against stock market ups and downs.
But being mindful of interest rate risk.
Yeah, that's key.
Right. Because if those rates go up, bond prices, they tend to go down.
Exactly.
And maybe the most important thing is to stay informed,
Absolutely.
about the economic stuff, policy changes, all that.
Yeah, keep an eye on those key indicators.
Inflation, interest rates, GDP growth.
Exactly. It'll give you a sense of where things are going.
And be ready to adapt,
Be flexible with your portfolio.
If you're feeling a little lost, it's okay to ask for help.
Oh, yeah, for sure.
Talk to a financial advisor.
Yeah, they can help you come up with a plan that works for you.
Investing is a marathon. Not a sprint, right?
It is. Yeah, don't get too caught up in the day-to-day.
Right.
Focus on the long game.
Build that portfolio that can handle anything.
Exactly.
Stay calm and stay invested.
That's the best advice.
I think we've given our listeners a lot to think about today.
I hope so.
I hope they feel a little more informed,
a
little more confident about making smart decisions.
That's the goal.
Thank you for joining today's Fincast. Please like and subscribe.
See you next time.
Take care.